What's up, folks? It's Eric from Option Edge. In today's video, we're going to get into Netflix earnings, what to look for, how to trade it with options, and all of that. Let's get into it. What's up, everyone? It's Eric from Option Edge, and this week we have earnings coming up for Netflix. Netflix has actually been on quite the tear lately. We'll get into the charts later, but first, I want to show you something I've subscribed to for a while now. I've been subscribed to, and that is Likefolio. Now, Likefolio uses social media analytics, and based on the social media buzz about certain stocks and companies and businesses, it gives you a prediction of whether they're bullish on the stock or not. So here we go. Basically, what they're predicting is they have a pretty positive earnings prediction for Netflix. The company has last quarter had its first subscriber loss, in more than a decade. So Likefolio is dialed into three metrics for this upcoming earnings, and one is subscribers. Like I said, they lost subscribers for the first time in a decade, which was bad news. So using social media analytics, they're seeing that mentions counts of subscriptions for Netflix are up 3% year over year. So that's a good sign. And another thing they highlight is how the new subscriptions in comparison to other streaming companies like Disney Plus, HBO Max, Hulu are all in negative percentage territory while Netflix is up. So compared to the competitors, they're doing much better based on their mentions count. Number two is the viewership. So they're also looking at mentions counts of viewership. So it's up 8% year over year, and compare that to its other competitors, Disney, HBO Max, Amazon Prime, all of them heading down while Netflix is up. The one negative about Netflix right now is that there's some cancellation mentions that are up, year over year they're up. Basically, they're attributing to some of the cancellations to some of the more polarizing shows. For example, like Meghan and Harry, Markle had their show, and a lot of people either feel very strongly about them or they feel very negatively opposed to them. So when you're negatively opposed to something, you're going to be more apt to going to social media and tweeting how much you hate Harry and Meghan, and that's sort of what's happening here. Even though this was their most watched documentary series. And then they go into how Google Trends is showing that how to cancel Netflix mentions are on the down. So that's another piece of evidence why they're not too worried about subscription cancellations. All right, so we're out of Likefolio. Let's take it to the chart. So I'm using CML Pro Pattern Finder, which is an AI charting software. So you can see we have this trend line here that we've been bouncing off. So that's a bullish signal. We're bouncing off the trend line. And then if we go over to the some of these technicals here, we have industry relative to strength. So think of the streaming industry or tech industry. There's 121 stocks compared. In the last 3 months, the relative strength of the stock has been 79 compared to 12 months, the 12-month relative strength. So that in the short term, that's showing some bullishness. And then company relative strength is 93 to 18 in the 3 months versus the 12 months. So that's also very bullish. And let's go down to up volume to down volume. This is selling versus buying volume. Buying volume being up volume. And you can see in the last 30 days, the up volume is 1.64 compared to the last 50 days is 1.32. So basically what this is telling me is there's a lot of buying, there's strength in this stock. And in the last month, this thing has been up like 30% or so. So I am feeling that leading up to Netflix's earnings release, we're going to see some bullish momentum into that release. So how do we play this with options? Well, I'm going to show you a couple different ways of how to play this. All right, so I'm in my Tastyworks software platform. How do we want to play Netflix, So the 19th, this Thursday coming up, is when earnings will be released. And a lot of times I will make plays on the weekly expiry. But since I think Netflix is going to have a nice little beat after earnings, I think the way I want to play it is just selling a put spread outside of the expected move. And here is the plus or minus expected move in just terms of dollars. So you can move $42 north or south of the current price. Current price is at $332. So $40, 42 bucks. Below the current price is around $290. So if we wanted to, we could sell the $290, $285 put spread, credit spread, And let's take a look at those statistics here. So our probability of profit on this trade is 78%. We have a P50, meaning the probability of us realizing 50% of profitability is 83%. Our delta is about 2, theta is 1.5, max profit's $1, and our max loss is the negative $400. If you wanted to, you could maybe even get more bullish. Maybe that's what I will do. Maybe move this spread up a little bit. Our pop is reduced, our P50 is slightly reduced, but nevertheless, our max loss is reduced, so our max profits increased. So this is what I'm thinking. Obviously, with the Likefolio data, you could do some sort of bullish call spread, call debit spread. Like, for example, we could buy the 330, sell the 335. That way, our max profit is basically we're risking one to make one. Our break even is going to be $332.50. So that's what I'm thinking for Netflix. If you guys have any other ideas about how to play this, leave some comments, please.